Hey, welcome back. Let me ask you something honest. When someone tells you about a crypto project and says it is going to be the next big thing, what do you actually do? Do you research it deeply and make an informed decision? Or do you look at the price chart, check if it has gone up recently, read a few tweets about it, and then decide based on that? If you are being honest, most of you are doing the second one. And that is exactly why most people end up buying projects that look exciting but have nothing real behind them. They pump, then they dump. And the people who bought without doing proper research are left holding worthless tokens. Professional investors do not work that way. They have a systematic process for analyzing every project before putting a single dollar in. They ask specific questions, they look at specific data, and they make decisions based on evidence, not hype. Today, I am going to teach you that exact process. By the end of this video, you will have a complete professional framework for analyzing any crypto project. You will know exactly what to look for, what red flags to avoid, and how to separate genuinely valuable projects from the thousands of worthless ones flooding the market every single year. This is the research process that protects your money and finds real opportunities at the same time. Let us get into it. Start with the problem the project solves. The very first question a professional asks about any crypto project is the most basic one. What problem does this actually solve? This question alone eliminates the majority of bad projects immediately. Because most projects in crypto do not solve a real problem. They exist to make money for their founders and early investors. And once they have taken enough money from retail buyers, they disappear. A real project with long-term potential exists because there is a genuine problem in the world that it is designed to fix. And the blockchain or crypto component of the solution makes it meaningfully better than existing alternatives. Let me give you examples of clear answers to this question. Bitcoin solves the problem of needing a trusted central authority like a government or bank to transfer and store value. It allows people to transact and hold wealth without any middleman controlling it. Ethereum solves the problem of building applications that require trust without a central authority running them. It allows developers to build decentralized programs that run exactly as programmed without the possibility of censorship or interference. Solana solves the problem of blockchain transactions being too slow and too expensive for everyday practical use. It makes decentralized applications fast enough and cheap enough for real world adoption. Each of those answers is clear, specific, and describes a real problem that people actually care about. Now apply that same test to any project you're researching. Can you explain in 2 sentences what real problem it solves? Can you explain why the blockchain version of this solution is meaningfully better than what already exists? If you cannot explain it simply and clearly, be very cautious. Either the project does not have a clear use case, or the people promoting it do not understand it well enough themselves. A project with a vague or confusing answer to this question is a red flag from the very start. Analyze the team behind the project. Once you are satisfied that a project solves a real problem, the next question is, who is building it? The team is arguably the most important factor in determining whether a project will succeed long term. Great teams can pivot, adapt, and execute through challenges. Weak or dishonest teams will fail, or worse, run away with investor funds. Here is what to look for when researching the team. First, are the team members publicly identified and verifiable? Go to the project website, find the team page. Then go to LinkedIn and verify that those people actually exist, have the backgrounds they claim, and have the history they describe. It sounds basic, but you would be shocked how many projects have fake team pages with stock photos and invented credentials. Second, do the team members have relevant experience? A project building blockchain infrastructure needs developers with blockchain development experience. A project building a decentralized finance product needs people who understand both finance and technology. Relevant experience matters enormously. Third, what is the team's track record? Have these people successfully built and shipped products before? Have they worked at credible companies or institutions? Have they previously been involved in failed or fraudulent projects? A quick search of every team member's name combined with words like scam, fraud, or rug pull is always worth doing. Fourth, how does the team communicate with the community? Do they post regular transparent updates? Do they answer difficult questions openly? Do they acknowledge problems when they arise? Or do they only communicate when things are going well and go quiet during difficulties? Transparent, accountable, and consistent communication from the team is one of the strongest positive signals a project can show. Anonymous teams are not automatically disqualifying. Some legitimate projects have anonymous founders, but anonymous teams require significantly more scrutiny of everything else before you consider investing. Understand the tokenomics. Tokenomics is the economic structure of a cryptocurrency. It covers how the coins are created, distributed, and how the supply works over time. And understanding tokenomics is one of the most important parts of professional crypto analysis. Bad tokenomics can destroy even a genuinely good project. Good tokenomics can provide long-term stability and value growth for a legitimate project. Here are the key tokenomics factors to examine. First, total supply and circulating supply. Total supply is the maximum number of tokens that will ever exist. Circulating supply is how many are currently available in the market. A project with a very large total supply but a very small circulating supply right now is a warning sign. It means a huge amount of tokens will enter the market later, creating selling pressure that pushes the price down. Second, token distribution. How were the tokens initially distributed? How much do the founders and early investors hold? If the founding team holds 40 or 50% of all tokens, they have enormous power to dump on the market at any time. Look for distributions where no single group holds a disproportionate amount. A healthy distribution gives meaningful allocations to the community, the development fund, and the team with reasonable vesting schedules. Third, vesting schedules. Vesting schedules determine when team members and early investors can sell their tokens. A short vesting schedule means founders and investors can sell quickly after launch, which often leads to immediate selling pressure and price crashes. Longer vesting schedules of 2 to 4 years with cliff periods align the team's financial interests with the long-term success of the project. Fourth, token utility. Does the token actually need to exist? What is it used for within the ecosystem? Tokens that have clear utility, meaning people need to hold or use them to access the project's services, have genuine demand drivers. Tokens that are purely speculative, with no real use within the ecosystem, have no fundamental reason to hold their value. Evaluate the technology and roadmap. Step 4 is evaluating what the project has actually built and what it plans to build next. This is where you separate projects with real substance from projects that are all promises and marketing with nothing behind them. First, look for a working product. The most important question about technology is simple. Does anything actually work right now? Can you use the product today? Can you visit a live application, connect a wallet, and interact with the protocol? A project that has a working product, even an early version, is in a completely different category from a project that only has a white paper and a roadmap full of future promises. Second, check the GitHub activity. GitHub is where most crypto projects store and update their code. It is publicly visible for most open source projects. Go to the project's GitHub page and look at the commit history. Are developers actively writing and updating code regularly? Active development activity is a positive sign. A GitHub that has barely been touched in months while the team is actively marketing the project is a serious red flag. Third, evaluate the roadmap honestly. A professional roadmap has specific milestones with realistic timelines and clear deliverables. Compare the current roadmap to previous versions. Did they hit the milestones they previously promised? Consistent execution against stated goals is one of the strongest signals of a trustworthy team. Consistently missing targets while always promising big things in the future is a red flag. Fourth, understand the technical differentiation. What does this project do technically that others do not? Is there a genuine innovation, or is it a copy of an existing project with a new name and logo? Technical differentiation matters because it determines long-term competitive advantage. Assess the community and ecosystem. A strong, genuine community is one of the most valuable assets a crypto project can have. And a fake or manufactured community is one of the biggest warning signs. Here is how to assess the community honestly. First, look at the quality of engagement, not just the size. A project with 50,000 Twitter followers and hundreds of likes on every post looks impressive. But are those real engaged people, or are they bots and paid promoters? Read the comments. Are people asking intelligent questions and having real conversations? Or is it mostly generic hype comments that could have been written by anyone about anything? Second, check the developer ecosystem. How many independent developers are building on top of this project? Are there active third-party applications being created? A thriving developer ecosystem around a project is one of the strongest signals of long-term sustainability because it creates network effects that are very difficult to replicate. Third, look at the partnerships and integrations. Real partnerships with established companies or protocols add genuine credibility and utility. But be careful here. Many projects announce partnerships that are actually just informal conversations or non-binding agreements used for marketing purposes. Look for partnerships that have resulted in actual integrations that real users are using. Fourth, assess the overall sentiment balance. Healthy projects have communities where both positive and critical voices exist. If every single person in the community is unconditionally positive and anyone who raises questions or criticisms is attacked or banned, that is a cult mentality. And cult mentality communities are almost always built around projects that eventually fail their holders. Check on chain data and market metrics. The final layer of professional analysis uses on-chain data. This is data that comes directly from the blockchain itself and cannot be manipulated or faked. Here are the key on-chain metrics to check. Total value locked, also called TVL, is relevant for decentralized finance projects. It measures how much money is currently being used within the protocol. Growing TVL indicates growing real usage and trust in the protocol. Declining TVL means users are pulling their money out. Active addresses show how many unique wallet addresses are interacting with the network regularly. Growing active addresses indicate genuine user adoption. Stagnant or declining active addresses, despite positive marketing, suggest the project is not actually being used by real people. Transaction volume tells you how much activity is actually happening on the network or within the protocol. High and growing transaction volume is a fundamental sign of real utility. Token holder concentration shows you how the token supply is distributed among wallets. If a very small number of wallets hold the majority of the supply, those holders have enormous power to move the price. High concentration is a risk factor. Tools like Glassnode, Dune Analytics, and the blockchain explorers for each specific network give you access to all of this data for free. Spending 15 minutes looking at on-chain data before investing in any project will tell you more truth about that project than hours of reading marketing materials. Let me bring your complete professional analysis framework together. Step 1. Define the problem. Can you clearly explain what real problem this project solves and why blockchain makes the solution meaningfully better? Step 2. Analyze the team. Are they publicly verified, experienced, and credible? What is their track record? How transparently do they communicate? Step 3. Understand the tokenomics. What is the supply structure? How are tokens distributed? What are the vesting schedules? Does the token have real utility? Step 4. Evaluate the technology and roadmap. Is there a working product right now? Is there active development on GitHub? Do they consistently execute against their stated roadmap? Step 5. Assess the community and ecosystem. Is the community genuine and engaged? Are developers building on the platform? Are partnerships real and resulting in actual usage? Step 6. Check on-chain data. What do TVL, active addresses, transaction volume, and token concentration actually tell you about real-world usage? Here is the truth that protects your money. Any project that cannot answer these 6 areas clearly and credibly is not ready for your investment. Hype, price action going up, and social media excitement are not substitutes for substance. The projects that build real things, have credible teams, have healthy tokenomics, show growing on-chain activity, and maintain genuine communities are the ones that survive bear markets and create real long-term value. Do the research every time for every project. No matter how excited you feel about it, your capital is worth protecting with evidence, not emotion. If this framework gave you a professional tool for evaluating crypto projects, please hit the like button and subscribe. Share this with someone who is about to invest in a project without doing proper research. This could save them from a very expensive mistake. Drop a comment below and tell me which crypto project you are currently researching. I read every comment and I will give you my honest take. I will see you in the next one.